Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, and we're at the 26th of September, 2022, 7:20 p.m. Central Time. I want to show you something. This is my website, our front page, Ira Epstein, and all you need to do is type in iraepstein.com into your Google or whatever you're using, and this will pop up. Under market research, I put up a new report over the weekend. Stock indices. My reports only stay up 3 business days. They're not meant to be history. They're meant to be right now. They're important for this period in time. I don't go back and say, oh, look what I predicted back in this month and that. They're not meant to do that. They're meant for right now, this trading environment. I go into great detail in that particular report about stock indices and why I think that we're at a zone right now to get a short covering rally. And then what to do with the rally, when I think the break will end, and I carry you through into year end in it. I do daily charts, weekly charts, and then I give you a 30-year, a 15, and a 5-year window in seasonals. Now, we know seasonals in the long term are one thing, but this is a unique environment we're in, so you've got to take them, you might think, with a grain of salt. To a degree. Does that mean we won't get the Santa Claus rally? No, I'm in the school of thought that thinks we will. I'm also in the school of thought that thinks that we probably have seen the peak in headline inflation. I say that because the strength of the dollar, and while it's down tonight 30 points, it was up 100 during the day on the close. That strength of the dollar takes commodities such as crude and other markets. You're no longer at $90 and WTI, you're at 76. This all gets measured into inflation. When I come to the grain markets, it'll be back and forth action. Be careful in these grains right now. Harvest is underway in both soybeans and corn, and you have this monster hurricane coming. And the question is, what does it do? They even think these rains can reach the Chicago area. They were talking about it tonight in our news. And we are talking something that can be a monster. Hurricane 4 is predicted. I don't recall the last time Tampa got hit with a Hurricane 4, but I've heard talk that it's so warm over the Gulf, it might flirt with being a 5. And if it slows down, which is also what they're predicting, the rain event can be monstrous. Now, that rain event depends where you come in. If you come in, and I mentioned this for the grains, if you come in the panhandle, which way are you going to shear? Are you going to go into harvest areas? What are you going to do? Are you going to make it impossible to harvest things? You always got to think this stuff out. When you take a look at nat gas, they've already shut 2 rigs, British Petroleum, for oil. I don't know what they'll be doing for nat gas, but generally you get a storm of this size, they start ordering people off platforms. It's easier to do that than to put people in harm's way. In the metal markets, a 2-year low. If you look at the British pound today, this is a big improvement. It got under 104. There was total panic this morning in the market, and the gilts went up 50 basis points. That's the equivalent of the central bank raising numbers. The market was pricing in this morning that in the gilts there'd be a 200 basis point hike by November. When panic hits, and I never know what's reality. 100 points, I think, is a given from the Bank of England. If we were to enter more of a panic stage and this thing starts dropping away on you again, I was surprised that the bank didn't become more vocal today. They'd have to get vocal. Their job is to make it a stable market. And I think that they're doing their best to avoid it and let the market forces take care of everything. Interesting time. In any case, when you come to the S&P, you're not at the last break low. I'd be surprised if we don't take it out, but it doesn't have to be this leg down. This leg's been a heck of a leg. You can get a bounce at any time. If we take a look, you can see on a bar chart how you've come down in a very orderly fashion. And when we look at the market, up until today, which is Monday, you have been making lower and lows every day. Now, for the Tuesday trade, we're getting a little bit of a bounce and haven't done that yet. But each day has had a lower and low. That's rather unique in itself. The market is under the 18-day average, so the bias is down. The swing line is down with lower highs. But how many days were you under the Bollinger Band? When you were under the Bollinger Band, you had day one, and that was, I'm going to count that today. Okay, I'm going to count backwards. Day two, day three, day four. You rarely go beyond 5. So here you are on 5. You're at the eye of the hurricane for the market to give you a bear market bounce. That's all that I'm saying in this. What you do with it's very important. I cover this in my report as best as I can for you, and certainly in my updates that I put out every morning for my paid subscribers. You have an embedded reading. I'm bearish, looking for a bounce, a way to get short on a good rally. Good is the key word here. You gotta, will the market even give you what you might call good? Good is going to be an open word. You can see what the market's doing in the NASDAQ, moving to the right-hand side of the Bollinger Band. The market trying to move to the right-hand side in the Dow. The market moving to the right-hand side here. That's my problem. With the embedded readings, do we get enough of a rally to make a worthwhile short sale? That is going to be the big question. This thing's locked into a bear trend. Other than short covering, I see nothing that makes the market rally very big. It can only be the short covering. I don't think the Fed's coming to the rescue on anything. I think all the data we're going to get from housing starts and any numbers that you get of the different regions of the country for manufacturing and sales and the like, we get it every week. I don't think it's going to be too good. When we come to the VIX cash, you're on a stilt over the upper Bollinger Band. I'd be very careful. Market there especially likes to come back into it. Doesn't spend much time over the top of it. So that's another reason I'm looking for a bit of a rally. In the bonds and notes, they're just bearish as can be. They latch on to this. They get under the band. They pop back at you. This has been their pattern. I think it'll continue. But it's not even showing a sign that it wants to give you much of a rally. Same in the 10-year note. So you've got to be careful with these. So be it the stock indices and the interest rates, because you've had 3-4 days underneath them, they're ready to move to the right-hand side from my perspective. Doesn't mean I'm right, but it's from my perspective. And on such, I think you want to be a short seller. I'm not interested in a 10-point rally to go short. I have to have something that I don't get steamrolled on good short covering and go, darn it, I sold too soon, and then the market goes the other way. In the dollar index, it's the opposite. If we step back together here, day one, which was today, Monday, over the Bollinger Band. Day two was the day before. Were you over it here at 110.05, over it, day three, but not here. So right there, no. So you're not excessive yet. 3 days is saying, okay, it can pull back. It's also trying to embed. I think it'll succeed on that. And I wait for it to develop, and that means a trade is coming. So I'm seeing trade setups develop. They're not here yet. They could be as early as tomorrow, especially in the stock indices, dollar by Wednesday. Right here, you're not embedded. You're 4 days in a row or so under the band. No, let somebody else sell under that band. You rarely go beyond 5. You can be 5. It's rarely go beyond. So 6, very, very rare. So your window's open for the market to give you that bounce off of like pulling on a rubber band that comes back. British pound, same type of thing. I'm looking for more of a rally. And if it loses the embedded reading by closing over 21, you catch the shorts here, you could really get your head handed to you. Just the opposite of what you'll read in the newspapers. I go by the chart picture, not the what the newspapers say. I know why we broke. That's what I use the newspapers, and I call them papers. You know, I'm all over the internet reading. But that's basically what I look for. But if this market wants to lose that embedded reading, I'll play my work that you're going to get a short covering rally of some merit to it. In Bitcoin, oversold, sideways action. And I'm listening to people talking how well Bitcoin is doing. I don't know what these people are smoking. This is a market that just recently, okay, in June was 32,000. It's in the $18,000 to $19,000 range right now, and it's doing well. I guess what they're saying, and this is what I was picking up on Bloomberg today as I was watching TV, is because the stock markets have fallen so much, this normally ties itself to the NASDAQ, and with the plunge in the NASDAQ, it didn't plunge with it, so that's constructive. Okay? That's the argument. In WTI, the differential between WTI and Brent, you got up into the 730 area here. Okay. Obviously, WTI wants to be stronger. Now, what is going to happen? It's as sure as I'm talking to you. OPEC Plus is going to cut production. They're going to defend their price. In addition, you know that they haven't met their quota. I don't think they've met their quota for a year or more. So that eventually comes home to roost, and what you wait on is the colder weather to make that play come alive, because you need the diesel, the heating oil, and all that. When you look at the Brent, down pretty hard. Do you think that the Saudis are happy with what they're seeing? Remember, when the market was over here, do you remember that? Here, they said that there's schizophrenia in the market. This market doesn't belong at 90. It belonged at 100. Well, now you're sitting here at 84. I guess the patient's gotten even sicker, and they have a solution for it. They will cut production. That's what I predict will happen. In the WTI, same thing. You don't go short under Bollinger Bands. You're oversold. I'm not telling you to be bullish. I'm saying I don't want to be bearish under a Bollinger Band, very clearly. Gasoline, you're retesting these lows here. What will the market do is going to be the next big question. It's not trending. It's caught in the narrowness of the Bollinger Band, the black lines. Look at how narrow they are. I don't think there's a lot of downside, but I don't see any reason to be long. In the nat gas, well, Hurricane Ian is coming. Is it going to impact anything? I don't know what it's going to do. I'm not a weatherman. I know that by Wednesday, today's Tuesday, there's going to be a lot of havoc. And if this thing is really slow moving as they're predicting, can you imagine? You can get 20 inches of rain in areas, and it's slow. Nothing can withstand that. It's just the damage will be tremendous along the Florida coast. We've seen it before. But if you rally, where's the resistance? It's pretty clear. 799 to 799.5, and you're about to get a bearish crossover where the 18-day average is going to go under the 100. That often leads, if we can get a rally here, to another break test of that low. That's what I look for. And the big support, big time support to me is 655, basically the 200-week average. So I cover a lot of detail tonight. You've got, if you go to my website, iraepstein.com, and you come in under market research, give it a click, enjoy the report. I think you'll like it. I'm going to be doing those, as I told you, on a regular basis, not just stock indices. I might do grains next, metal markets, but I'm going to make it, I want to do one or two a week as they come up. They're free to my subscribers as well. So you might want to go take a look at that. You get them free for a while too. But we limit how many free views you get during the year. We want you to subscribe with us. We want you to support this channel. I'm Ira Epstein. You have a good day. I'll talk to you all later.